What is up, everybody? Solomon here. Super excited to be with Genfinity, interviewing a multitude of builders across Web3. This is a bucket list one for me. Today, I'm joined by Yuval Rooz, co-founder of Digital Asset. Digital Asset has spent more than a decade working with systemically important financial institutions and market infrastructures. Now with Canton Network, we are seeing the emergence of a public blockchain designed specifically for on-chain capital markets. Thanks for joining me today, Yuval. I am super excited about this one. I want to kick off here and do the low-hanging fruit question. How do you explain what the Canton Network is and the core problem that it is designed to solve? And thank you so much for joining.
Sure. So yeah, it's also a bucket list for me to do a podcast with a king. So so it's great to be here. Maybe just as quick background. So I come from more of trading. I was at Citadel and then DRW Trading. And for those that don't know, DRW started Cumberland Mining, which is one of the largest crypto market makers in the space. And when both me and my co-founder Eric decided to leave DRW to start this company, we realized that there's a lot of opportunity to make money trading crypto, but that there's a bigger opportunity, and eventually we believe that every asset will become a digital asset. Hence, the company we started was called Digital Asset, which is terrible for SEO. You do not want to have that name. But back then, we were able to buy digitalasset.com for, I think, $5,000 or $10,000. It was that early on. And we started thinking about, well, what do we want to do with it? And, Ethereum got started at the same time and clearly was going down a route of, world computer, where we're going to, create financial freedom for individuals. And although, that really resonated with us, our view was that when you end up looking at markets, generally speaking, retail are extremely important, and they are extremely important to us, but a lot of the volume and liquidity comes from the institutional players. So we then ask ourselves, well, what would it take to bring those institutional players natively on-chain? And, I think that the first thing that came to mind was privacy. And back then we were told that we are morons, that we don't understand crypto, that this is the new world. The new world is pseudo-anonymity. You don't need privacy. You need to be able to have third parties independently validate your business logic. And listen, who am I to say that they were wrong? Because clearly they've been very successful. I think that if you take though a step back, and you do see a lot of names making press releases on public permissionless chains, and Ethereum is clearly at the front of that, you end up realizing that they're not truly acting natively on-chain. Really what you're seeing today on public permissionless chains are a bunch of IOU tokens, meaning you are trusting someone who's doing a lot of things off-chain to meet an obligation. And to me, the whole goal of blockchain was to actually eradicate that need for trusting that something is happening off-chain, which then later on you find out that it actually never happened, right? So, I take even the examples of some of the funds that have been, launched, whether it's money market funds or not. A lot of times, you end up realizing that most of the logic, most of the important stuff is happening off-chain. So for us, we said, well, if you truly want to bring capital markets on-chain, as you said in the beginning, you need to be able to convince people to do everything natively on-chain, like everything, like personal identifying information. And, that makes it obvious that you won't ever be able to do that without privacy. So that's kind of where we started. And, our view was that building something that would be compatible and acceptable for a large-scale institution is not something that, just a white paper and kind of like quick code base is going to work. And it's not that maybe even the first logical architecture might not be the one that is successful, but I think that a lot of times people underestimate what does it mean when you have something in production and now you need to do an upgrade, or you need to tell all the applications on your chain to upgrade. Like thinking about what does it mean for the life cycle of an enterprise that needs to think about backwards compatibility? They have other priorities. You need to think about those things. So it's taken a very long time to build Canton, and we've been very patient. We wanted to really launch the network when we felt that it was the right time, and it's taken a long time to get there. That's what Canton at the technical level is. There's a lot to talk about beyond the technical, why I think it's different than everything else out there.
I'll tell you, it's going to be very hard for me to keep this conversation less than an hour. I will tell you that 100%, because a lot of the stuff that you said resonates so much where, first off, as a sidebar, you can't imagine how difficult it was to do targeted searches and research on digital asset back in the day because of the name versus digital assets out there. But you mentioned what institutions and enterprises are bringing to this space. And one other thing that seems to be pretty apparent, is that they are driving forth kind of the compliance and kind of the regulatory clarity aspects too, because it seems like they're actually the ones that are making the headway. I'm interested too when you talk about the amount of time that it took you guys to architect Canton. You guys are operating in tandem with market infrastructures measured literally in trillions, and this isn't just POCs; these are live deployments. So when you guys operate at that scale, how important is it? What the design requirements for what kind of went into how you guys operate? And I guess kind of the way that I'm trying to lead here is, I've heard a lot with the pain points of actually integrating crypto, blockchain, DLT, and it's just so hard to rapidly deploy solutions that it's I think as you mentioned, there's not a side group of employees at all these enterprises that are oh, we can't wait to integrate, some new technology and figure out how to remove the 800 band-aids that we've, put in place over decades and decades of our institution. So what does that scale look like for you guys operating alongside these institutions that are kind of running, managing, clearing, all this stuff that amount of capital?
I actually think, it's a great question, but I think that it's not necessarily the complexity of the technology and the requirements. The requirements are very complex. It's actually time. And what I mean by that is when you start thinking about building distributed systems where you have dependencies on other participants in the network, and you need to think about, well, I need to upgrade applications, or I need to upgrade the network. Well, what does that do to the application on the network? Does it break the applications on the network? Do I need to have now thousands and thousands of nodes all coordinating an upgrade at the same time? Those are all questions that I would lie if I said I knew in advance as requirements. I'm now very wise saying it because we have, over 10 years of experience. But I actually think that the best thing that we've done is being patient. And what I mean by that is, before we launched the network, we actually worked with customers to use Canton in a fully private permissioned manner. Not because we wanted to, not because we thought that that's the future, but because it actually gives you an opportunity to learn a lot of things that if you try to do that on a public chain, it's going to be a disaster. It's going to be impossible to rectify certain things. And that's why I think that a lot of the public chains today will have a challenge introducing privacy, because they have such a huge ecosystem that have already built. Introducing something that is so intrusive is not something that is easy to do. So for us, being patient, I don't know, I need to ask our CTO, what is the version of Canton before we actually launched it? There were multiple iterations, and there were things that were introduced and then things that were removed.
Sure.
And that, to be honest, I think is the best thing that we've done is actually be patient, work with clients that share the vision, let them play with it, get a bunch of engineers screaming at us, and those engineers are the best. I have no complaints, but their complaints and their challenges were really critical feedback into the things that we need to change and improve over time. And even then we didn't get it perfect, but I think that is probably the most important thing that we were able to do, because I said privacy is kind of like table stakes, but it's actually like there's just so much shit around it that just has to do with the life cycle of running a business and thinking about your software and support and those type of things that you have to have answers for them before you can open the floodgates.
Sure. I think it's really interesting when you mentioned, like, you allude to kind of the downstream effects. And I think sometimes in this space, especially on like crypto Twitter, we don't zoom out and realize what's happening. I share an extremely similar viewpoint to you, where I think that at some point, digital assets will kind of be all encompassing. But then I think about enterprise and institutional adoption, and we don't realize that, like, if an update gets pushed and something goes wrong, it's not like in crypto which is still kind of very small. It's like millions and maybe even to the scale of billions of users can get affected. I mean, it starts getting really ugly if things don't go right. I'm interested from the privacy standpoint. Privacy
I'll take it one step further. Please. If an institution has an issue that is material, I will tell you that rectifying that and getting said institution to continue is very hard. They are extremely risk averse to begin with. If something goes bad, I can tell you that being able to reconvince them is 10x harder than the first time. So and that's just kind of the what you need to be prepared for. So if these bugs that people lose tens, single, even hundreds of millions of dollars happen at an enterprise level, you're done. Like, it's over.
Yeah. I think that's kind of why I think some of the narratives that I see across crypto Twitter are extremely comical, where it's like there's a flip of the switch, and I'm like, there's a lot of actual testing going on. This is why we see proof of concepts that, like, sometimes we don't even see until a handful of years later, because of the amounts of testing going in. From a privacy standpoint, because I know that this is, one of the things you guys certainly specialize in is kind of almost that, and correct me, however you guys phrase it, like programmable privacy is, I guess, kind of the way that I look at, because every single user is going to have different needs for pretty much all sorts of different things. So when we talk about institutional scale adoption, which you guys are certainly sitting in the midst of, why is privacy, I should say programmable privacy, a non-negotiable?
So I think that I like I like that you called it programmable privacy, and I'll explain why I like that you called it like that. I think one of the biggest challenges or issues, in my view, in crypto is that it's kind of like so binary. This is our worldview, and if you don't fit into it, out. And the reality is that the world is not binary. I mean, I know that in every subject matter today, even outside of crypto, we fall into these binary views on everything. But the reality is the world is not binary. Imagine if the internet said to every website, you have to have no security certificates. Everything behind the website is public, permissionless for everybody to see, and you have no control over your website. Or vice versa, every website has to be fully private. You have to have login password, and nothing can be shared. Like, that's just like the internet would never work, right? So the reality, and by the way, Canton takes that view across multiple things, including tokenomics and other things. Like we can talk about those things. And inherently, The name Canton comes from the Swiss Canton system, where even though you're in one country called Switzerland, I always say to people, even the cantons themselves don't spell the word canton the same. If you're in Zurich, it's with a K. If you're in Geneva, it's with a C, right? They don't have the same tax rates. They have different laws across. But when you go from one canton to another, you don't go like, oh, wow, I'm in a different country.
Sure.
Right? So to me, the reason why programmable privacy is so critical is because you need to be able to offer very heterogeneous applications on the same network. I'll give you an example. If you are, let's say, building something for medical records on chain, well, you would expect that that would be as private permissioned as humanly possible, right? We would hope so. But if, let's say, you build a stable coin, well, actually, you might say, I want the sender and the receiver to be private, but I want the notional of a transfer to be public because I want to advertise to the whole world how much volume I do. I want to potentially be able, as a stablecoin provider, to show my reserve in a fully public, permissionless manner, right? So the reality is programmability. To me, privacy, the capability of privacy is non-negotiable. The ability to do it in a programmable way, meaning it's not binary, either it's private or not, but you could have shades of gray of what is private, is just a very pragmatic way of how the world operates. And as a result of that, you don't force people to say, well, what can I do on chain versus what I cannot do on chain? Because the chain has a very kind of like narrow view of the world. Yeah. So that's why I think that programmability is critical. But I think that this idea of not everything is binary goes throughout kind of other aspects of the chain.
Yeah, and I think what's interesting to me too is like, well, I don't want to get too far into the future looking statements here, but this extends to data, I'm assuming too, because I mean, I would imagine like certain things have to be private, like based on what, entities or jurisdictions or compliance aspects have to be in place, like what people need to know for data versus things that are just totally open. Like, how does this differ from, because I know we hear like zero knowledge is like more trending, I guess, over the past 12 months I've seen, even though it's been around for probably years. Versus...
Yeah, my co-founder actually is one of the researchers that
really,
wrote the lip snarks.
So the way I like to think of it at a really, because I'm obviously not like a technical guy, but from a really simplistic viewpoint, is I think of zero knowledge as the minimum amounts of information I have to give to be able to participate in something that I want to participate in.
It's even worse than that, in my view. Zero knowledge is an amazing technology. It truly is. It is, the way I describe it is, imagine you're interested in an output of some kind of a function. So let's just take a very simple example. You want to multiply two numbers, right? But you're not interested. You don't really care what are the inputs, what have been multiplied. You just need the output, and you need to know that the output is correct, is a correct multiplication of, let's say, two numbers. For whatever reason, that's what you need. And the nice thing about it is, you get, let's say, 42, and you don't know if it was 6 times 7, or you don't know if it was 21 times 2, right? Like you don't know. And just making sure that my algebra is still correct. But my point is, right, I give this example, like, why is it good? Is like, imagine if you could actually, in the US, scan your ID using zero knowledge, and it just tells the bouncer the person is over 21. Like, that's actually really nice, right? I didn't have to divulge my name, my date of birth, my address, like a lot of information that, generally speaking, it's not even relevant to me getting into a bar in the US. So that's like, those are like good examples of why this technology is really cool in the context of privacy. I wouldn't, there's a whole element of ZK that is amazing for scaling, for increasing throughput. But let's park that aside because we're talking
Yeah.
in the context of privacy. And the reality is that is anonymity, meaning you don't really know what went into the box. You just trust that the box is telling you the truth. Now, in some cases, that's fine. Imagine you had in that example of the bar, there was a bug, and I scanned my driver's license when I just got my permit at 16, and it told the bouncer green, person is over 21. So I went into the bar at 16 and I drank a pint. Not good, not the law. I think we all drink a pint at 16, right? Like, my point
Sure.
is, the world is not going to melt down as a result of that. I think that we need to be a bit careful when we start thinking about, well, what happens when you start thinking about financial systems? And imagine that now you have a black box that says, well, this black box is managing a stable coin. And then you find out that there was a bug in the stable coin where people could actually mint stable coins out of thin air. But imagine that you trusted that stable coin, and now people that effectively printed money out of thin air went and used that stable coin to buy Bitcoins and disappeared, right? My point is, those are situations where we say, well, if I have a financial outcome that is reliant on the inputs being correct, right? You really want to see the inputs, right? If imagine that you take a loan against your home, right? A mortgage or a HELOC. If you're giving that loan, you really want to know, right? You really want to know that that the house title is there and that there's no lien. Are you going to underwrite like a whole yard of loans in the hopes that those titles were clean of liens and stuff like that, just because a black box told you yes?
Yeah.
Would you give loans to people that a black box told you that the KYC works? It works. They're good. Someone one day comes and knocks on your door and says, hey, Ryan, by the way, did you know that you were providing financial services for someone who's on the OFAC list for like the last 3 years? And you're like, but the black box told me that it's fine.
Yeah. Same thing. I mean, you can even extend it to like medical, somebody getting surgery because X, Y, and Z. I'm not going to go down the rabbit hole here, but
yeah, but my point is, when there are serious consequences to the inputs being incorrect, our view is that the parties that shared those consequences need to be able to see the inputs. And therefore, sure, Canton's worldview of privacy is not anonymity. It's not anonymizing the inputs. It's actually saying, hey, if you're not party to this smart contract, if you have no financial stake in the outcomes of the smart contract, you don't even need to know that it exists. But if you do, guess what? You get to see everything that went into the smart contract.
Sure. I could go down so many rabbit holes, but I know that I want to ask you about synchronization of finance too, because I think that I still feel like 99 point, I know that we get all sorts of like blockchain adoption KPIs, and until we're using it every day, it's like the KPIs don't matter to me. But I'm curious, what does synchronization of all of these markets kind of look like at scale? Because it seems like there has been a shift over the past 12 to 18 months of not just pilots, but kind of like the operationalization of the technology. I mean, there's real world entities that are dealing in very much so real world financial aspects that are going live. And we could get into, I know we're going to get into some of your guys' use cases in a while here, but when you think of scale, synchronization of finance, what does that look like for Canton? Let's not say like this year, but near future.
No, we could talk about this year as well, but I
Sure.
think that maybe just taking a step back, because I think it's a very important question. I think that one thing that I think is important to understand is that Canton does not believe that every transaction needs to be duplicated to every party in the world that have no relevance in the third transaction.
Sure.
So our view is that public chain, their most important value add is composability. It's composing transactions. So there's the whole architecture of Canton actually allows you to do a lot of transactions that if you're not trying to compose a transaction, you'll be able to do, you know, in the millions of transactions per second eventually across the network, because the network can grow horizontally. So really what we're trying to do right now is how do we bring interesting assets to the ecosystem that actually have real world utility. We started with repo.
Yeah.
Banks need to be able to do repo in order to meet their capital requirements. It's a north of $10 trillion market every single day. Prints every day, north of $10 trillion. Only in the US, it's $5.5 trillion every day. And because we understand why repo exists and what are the things that people that trade repo are trying to solve for, we realize that actually if you can process repo 24/7 with like seconds precision, you bring a lot of capital efficiency to those entities. So we started building that with Broadridge, and today I think Broadridge does north of $400 billion of repo every day, which is getting close to 10% of the daily volume in the US. And it's only growing. And then we had the DTCC make this extremely important announcement where they selected Canton as the first chain to issue US Treasuries on, which again, I think that they will do it also on other chains. But, the opportunity to move collateral globally is something that is, in our opinion, going to make a serious dent in the efficiency of, or the inefficiency currently of, balance sheets. And as a result of that, the nice thing is you don't need to have millions and millions of users to actually start showing value happening. Now, that doesn't mean that we don't want to bring products to retail, but I think because we do want people to hold, Canton, and we want them to participate, our number one mission is how do we bring dollar utility to the network? And, and therefore our focus is going to be, collateral management at scale. It's going to be payments with privacy. We've talked to a lot of entities that are saying like, we love the idea of stable coins, but no privacy, we'll take the friction.
Yeah.
These are publicly traded companies that cannot have the whole world see how much they pay their vendors or their transfer pricing ahead of their quarterly earnings, right? Like those things are just not going to happen. So, we believe that at least in the near term, collateral management and payments are going to be kind of like the things that help scale the activity on the network. But, we have already a DEX with privacy on Canton. There's prediction markets with privacy on Canton. There's a lot of other things that, are more for consumer, but I think that those will, grow organically with the network, over time.
What kind of a symbol do you think that entities? I mean, DTCC is obviously, and I think most people outside of probably finance or this space probably don't know what DTCC is. And essentially, they clear global derivatives. You're talking like essentially quadrillions. DTC is their subsidiary. And they announced that they are doing this tokenization with you guys, which is absolutely massive. What type of a kind of like huge banner like for this industry and for the technology, and obviously this huge milestone for Canton, but what should this tell the world about where distributed ledger technology, blockchain are actually going, if that makes any sense?
Well, I mean, we've all said as an industry that this technology is going to bring efficiencies of a whole different scale, which as a result of that eventually will materialize in financial freedom and opportunities for people to participate in things that today they couldn't.
Yep.
And I think it's time for this industry to admit that we haven't been successful at doing that. I mean, it's just now. A lot of people, a lot of times when I say these things, they say, "But what about stable coins?" I'm like, "Yeah, sure. Stable coins have created opportunities in primarily countries where people didn't have good access to the U.S. dollars, and that's extremely admirable and something to aspire to do things like that." So I'm not, when I say these things, I don't generalize at everything. But I think when you think about the billions of dollars of investment and all the PR and all of the talk, I think that in relative to that, we haven't done enough. So to me, the reason why the DTCC is so critical is because it is the backbone of capital markets in the US. It just, whether we like it or not, I like it. I think the DTCC is a very efficient, it's a very well-run organization. That actually spend a good amount of time and resources to understand the potential for the industry with this technology. They need to be responsible. They need to think about, they are systemic. If the DTCC goes down,
Sure.
I don't even want to think what happens, right? So they can't just rush to it. But the fact that that organization that is so critical received the no action relief from the SEC to get going and is actually doing it, to me is a tremendous positive sign for the industry, that they do also see the opportunity of how to bring efficiency to markets beyond what we have today.
And I know this is kind of a sidebar, but you talk about stable coins, and I mean, for those paying attention and kind of doing some of the digging behind the scenes, it is not surprising that now we're seeing kind of the tokenized deposits being talked about much more than the stablecoin lens, from a lot of the banking industry and things like that, which I think could probably be an entire full discussion probably on what that means. But I love that you say, because I believe this too. I think the big opportunity for us, or for the you and I's of the world and the every man and every woman, is the democratized access, where I hope that we're heading towards a future where, obviously compliantly, it doesn't matter if you have $100 in your bank account or $1 million in your bank account, you're going to probably be able to participate in all sorts of different things. The FCA actually did a study like a month ago, and it was like a forward looking thought study. And they were like, this is what tokenization is going to open up for all citizens in the UK. But they also said, which was, I think, smart, they're like, just because citizens will be able to participate in all asset classes doesn't mean that they necessarily should from an education standpoint. But maybe just to elaborate a tiny bit on kind of the future you see with kind of democratization of access for not only people, but probably institutions and enterprise and all sorts of different things.
Sure. I like to take a very easy example. One of the things that I do say that crypto has done very well, and it's going to kind of get to the point of the question, is that it showed that there's a user experience that is not going to go back. And what I mean by that is when you actually use crypto to, stake on DeFi and participate, and you can participate on Aave, and, you can effectively use your asset to grant loans. And as a result of that, you participate in the outcome of those loans. To me, that user experience, that user expectation that you can participate directly is something that is not going to roll back, right? And that is a good thing. The problem is that for the most part, when you look at the activities that those user experience were, it was just kind of like, I won't use the word that I had around circle, but it's just like this infinite loop within crypto. It wasn't actually driving real businesses that had, real world problems and cash flows and things like that. So what I mean by that, so now taking it to the implication is, today, if I sit on US equities as an individual, I can't really pledge my US equity for like a borrowing and lending facility. I have to go through my broker. I have to go through certain players. And for the most part, I will tell you, the average Joe does not get to participate in that market. And if you do participate, it is a fraction of what is the revenue that gets generated. So I do see a world where now, there will be things like, or if not Aave, where it's going to become kind of like a decentralized marketplace for borrowing and lending of securities. So suddenly, if I have, my X amount of Apple shares and X amount of Google and X, and I'm just long and hold kind of person, I'll be able to pledge them and extract additional yield while these things are being lent out. And I will see much more of the revenue that is associated with that activity, because you're going to democratize access to those type of facilities, that now these facilities will have to compete with one another. Meaning I have to be very OpEx efficient as a facility like that, and I'm going to try to pass as much of the yield back to the holder, because that's why they're going to come to me. Right? So right now, what you're seeing in TradFi is that there's really, really specific intermediaries for certain of these activities. And they do what is the commercial right thing to do, is take as much revenue as you can, right? Without losing the clients. And I actually don't ding this. I'm a capitalist person in nature. I mean, right? But what will happen is, as markets become more efficient, and I'm a true believer in the efficiency of market, meaning there's going to be more options of how to pledge your own equity. I think what you're going to see is that the economics will start flowing more and more towards the ultimate beneficial owner. That's one example. Don't have to go that far.
Sure.
The other one is, don't know if you ever took a loan, but for the most part, the most used loans today for consumers are a mortgage and a car loan. I would say probably are the two most, popular. And we actually sit on many different types of assets, which we as consumers don't actually get to leverage as a result of the holders of these assets. So, I see a world where, again, you could take your, Apple, Google, whatnot portfolio, right, and be able to pledge that against a personal loan, right?
Yeah.
And those are two examples of how I think we will see much more freedom in terms of how do we participate in financial markets.
I often wonder if we're heading towards a future. I mean, I know tokenization is very real. This is a little bit of a sidebar, and I know we're going to run at time, so I'm going to try to get through the rest here. But this is a sidebar. I often wonder if one of the assets that we don't take into account, which is kind of intangible, is our individual data, because I feel like we're going to get back into the value loop at some point, where essentially we live in a very attention economy, and I don't think that's going to stop. And most platforms that people use right now are free, like Twitter is free and all these they're free for a reason, obviously. But I wonder if eventually, as all these different technologies converge, if our individual time and data is kind of put into that value loop. But that is a total sidebar, and we're going to go down a rabbit hole. I
think, listen, a lot of times people talked about monetizing data. I think that at the institutional level, 100% you're going to see that. We are already hopefully we'll be able to share on some projects already seeing that. I think at the individual level, I'm not saying, I would love for that to happen, but even on a personal level, do I use Google? Absolutely. It's a good product.
Yeah, 100%. Yeah.
And I know that they monetize my life. I don't know if you saw, they just had this settlement of about listening to you. I don't know if you saw that.
No, I did not see that. No.
Yeah, there was, I think it was just this week. There's all these kind of conspiracy theories that they're listening to you. And that's why I just talked about it 3 days ago, and now I'm seeing an ad for it. There was a settlement.
Oh, yeah.
There was a settlement. They haven't admitted that they did it, but they settled a case. So, so the reality is that I don't know, on the consumer side, not saying that it's not possible. I just haven't been clearly creative enough. And futuristic enough to think about a model.
Maybe I just have a super romanticized view of the future.
No, it is. I mean, listen, it's a good thing, but if we like things for free, right? And when things
Sure.
are free, you are the product. It's like
So
this is something that comes up in different permutations, whether it's like this whole geopolitics conversation. It's like, well, do you want to pay $10,000 for your iPhone? Do you want to pay $50 for Gmail every month? Like somewhere, the company that is building the product needs to make the money.
100%. Yep.
Is it from your data, or is it is it from you paying them the money? I mean, sure. At the end of the day, that's all I'm saying is like, there's no, I don't believe that arbitrages can sustain for a long term, and therefore, like, something needs to pay the bill.
So, and I kind of want to make sure we get through. I've got a couple more for you here, and I certainly appreciate. We're probably going to run almost right at time, but as I mentioned, and I guess I'm curious your thoughts on this. A lot of this space, when you kind of look out across crypto and blockchain, there's a lot of proof of concepts. There's a lot of pilots out there. You guys have real operational things, as well as kind of being the firsts for real operational things. And I'll just run through a couple of integrations here and maybe just give broad thoughts. So Canton Network, market infrastructure ties in directly with NASDAQ. And as another sidebar, NASDAQ a few months ago, like literally filed with the SEC for a digital twin version of the stock market, which is super interesting. But real integrations with Canton and NASDAQ, institutions like JP Morgan, which I believe that was one of the first transactions that that rode over top of like a public network's rails, which is huge for this industry. Broadridge and Repo markets. And there's a lot that I'm probably not going to catch, but maybe your broad thoughts on why, again, and maybe I'm asking you to reiterate it again, but why Canton instead of some of the other pilots that we've seen out there? There's tons of pilots. There's not a whole lot of, there's probably less than, however many real things are out there right now, but it's not. I'm going to ramble you. Yuval, you got to say.
So I say three reasons. We talked about one, which is privacy.
Sure.
I think another thing that people understate quite a lot, and is a big problem in my opinion in crypto, is governance. It's so boring, and it's so Web 2, and like, let's run an autonomous, decentralized, trustless ecosystem. Sure, I'm going to put $100 trillion worth of asset on it. Like, it's like, again, it's like, I think that, and that's, by the way, why I'm like, I don't have a problem. I'm actually, please keep on having this trustless, decentralized, without a number. We decided that we want to bring institutional volume on chain, and institutions require something that they can trust. So, I think the governance of Canton is one really, really big differentiator, in my opinion. Yesterday, Joris from Fairmint, which is on the board of the foundation, sent a screenshot of the tokenomics committee that has 100 people on a Zoom.
Wow.
Weekly. And now the network is live for almost 2 years. Every single week, 100 people dial in. To me, that is just as critical, because if you don't have the muscle memory to understand that the world is evolving very fast, and recognize that we didn't get everything perfect, far from perfect, it means that you need to have the muscle memory that we need to keep on talking about. We need to keep on evolving. We need to keep on thinking, what are the things that need to change? And it's not just like, hey, we did the hard fork, see you in 3 years. Like, you need to continue. So the governance, the structure of the governance, a digital asset does not control the foundation. We're just one vote of many. There's TradFi, there's DeFi folks in there. That's a huge differentiator. And then the last one, I think, is the economics of the network. I think that another thing that crypto have done very poorly is that it didn't align the incentives with those that actually generate value. And again, I go into my point about binary. People that generate value are not the same people at any given point in time. And what I mean by that is, a lot of times when I talk to people and I explain to them the evolution of the tokenomics of Canton, I explain that, in the early days of the internet, well, there was no internet. So the hottest companies on the internet were those that were creating it, like Cisco. You needed a lot of routers and switches. But once the internet became a thing, it's not that Cisco became, unimportant. It just became less important compared to Google or Facebook at the time, or all of the companies that, or Amazon, or all of those companies. And the reason why they became so important is because they were actually activating the internet. They had the customers, they built business models, right? They were higher up the stack. They were kind of like the funnel for people using the internet. And, in crypto, it's like, no, it's the infrastructure providers that get all the economics from the network. And I think that that's really why you had this proliferation of all of these, how do they call them, shit coins, that get listed, because at the end of the day, they had to figure out a way how to monetize, right? And that's not a good outcome, right?
Yeah.
To date, there is, to the best of my knowledge, no coin that have been issued on top of Canton. And the reason is that the economics of Canton are that we effectively, the network, rewards those users and applications that drive activity into the network. So if you're an application that generates a lot of volume on the network, you participate in the tokenomics. And if you participate in the tokenomics, you can take that money and you can decide to reward your clients. You can decide not to reward your clients. You could decide to reduce the fees to your clients. You could decide not to reduce the fees to your clients. But you actually have a monetization strategy that doesn't require you to come up with some kind of a random coin that you're still not going to figure out how it's the utility of that coin and how it's going to work for you, and lockups and all of those things, rather than like, no, we build a really good product. We're going to keep on improving the product. And if we're successful, we're going to make more money, right?
Yeah.
And we have the freedom, whatever we want to do with that money, whether it's giving it back to our customers or not. So I think that those three things, in my view, are the really critical differentiators of Canton that really help organizations join, and build on Canton.
So I'm gonna lead us out here, and I feel like we could have taken this so much longer. Maybe we'll have to do this again. We're heading towards a world where it's almost like a Cambrian explosion for technology and humanity. AI, DID, programmable privacy, payments, settlements, tokenization, all this stuff. When we talk about global adoption of blockchain and distributed ledger, what does that look like in practice for you? I think you mentioned you foresee almost everything becoming a digital asset at some point. I kind of like to think of it as just an upgrade to the internet. And we're going to be doing very similar things that we do now. It's just going to be a better experience, and we'll be able to do maybe a little bit more. But what do you, Yuval, from your standpoint, what do you look at from kind of a forward-looking statements for what you consider kind of the adoption stance to be?
I think that your point is right. I don't necessarily characterize it as upgrade to the internet, because it's just yet another different network that actually runs on the internet. But the analogy, the take is correct, which is, we don't think about the internet today, when we sit on the toilet and scroll on our phone.
It's amazing that we're interoperating right now.
Exactly. So eventually you'll compose a lot of transactions on the toilet, and you just won't think about the fact that you're using blockchain, right? Like that's really where we need to get to. And that's why, it goes back to the point when you ask me, what am I focused on? It's dollar utility, right? Like, bring activity, get people used to using the technology at scale. I can promise you that the clients of Broadridge today, when they do the repo, they don't think anymore that, oh, this is on a blockchain. They just do repo, right? Like, so the sooner we get there, the better.
Yeah. And that's, those are massive. I remember seeing that Broadridge announcement and just absolutely massive numbers. So that is talk about scale. Well, I know that we're running at time, so let me make sure that I do my due diligence here and share so that everybody can follow. Anybody that watches this, certainly appreciate you guys give at Genfinity a follow, and you can go and read our probably ever evolving deep dive, and we have a number of written piece of content on Canton and other networks. Go to genfinity.io for that. At Canton Network, thank you. At Canton Network is where you're going to kind of get a lot of the info here, and I know that there's a lot of other X accounts as well. And then Canton.network to learn all about Canton. And as we kind of ramp down here, Yuval, I want to thank you for walking us through how Canton is being built to operate at real institutional scale, how it fits into the broader evolution of financial market infrastructure. On-chain capital markets are coming, and one could argue that they're already here and just growing. But thank you for everybody watching. And yeah, Yuval, let's do this again. It's awesome.